Hi, today we will discuss a key component of your business financials, assets. You cannot speak about business, a growing business, a sustainable business without mentioning assets. It is the first account type on your balance sheet. I am just trying to lay down the foundation of how important it is to understand assets, what they are, and how they affect your business. Whether you're running a newly licensed agency or managing a growing operation, understanding your assets is key to qualifying for loans or grants and to making informed financial decisions. Before we get into the details, let me introduce myself. I am Chavis, a financial strategist that helps home care agency owners like you increase revenue by 25% or more with organized accounting and financial strategies. So, when you think of assets, what is the first thing that comes to mind? Is it cash? Is it vehicles? Is it equipment? What do you think about when you hear the word asset? So, an asset is anything your business owns that has value. To properly report your assets, you must have an understanding of which assets are current and non-current, which non-current assets are tangible and intangible, and when you should depreciate or amortize an asset. So there are a lot of components that come up when you speak of assets and making sure they are represented correctly in your financial statements. We cannot cover everything in this video, but what we will focus on today are depreciable assets. The reason I want to focus on this component is because we've just completed processing Medicaid cost reports, and one of the new requirements is to upload a detailed depreciation schedule. A detailed depreciation schedule is a list of all of your agency's depreciable assets. Purchase date is included, useful life, and the depreciable amounts claimed. If your agency has assets and you do not upload your depreciation schedule in the software, your cost report may be incomplete or inaccurate, risking disallowances or audits. Now, they still have a section where you enter your assets in the software, but now you have to upload the depreciation schedule into the upload center. So, in this video, let's go ahead and create a depreciation schedule. QuickBooks has a great fixed asset tool for those who have the advanced subscription. I'm going to share my screen so we can create one together. But before we go into QuickBooks, let's lay down the foundation first. Let's determine what type of fixed asset we should purchase. Now, not all fixed assets are depreciated. The rule of thumb is that you can expense fixed assets if the purchase price is less than 2,500. Now, for my home care agencies, for Medicaid cost reporting and tax compliance, you must depreciate assets that are capitalized, meaning the lifespan is longer than 1 year and the purchase price is 2,500 or greater. If your asset is expected to last longer than a year and was purchased for $2,500 or more, it must appear on your depreciation schedule. Now you can still depreciate fixed assets that have a purchase price less than 2,500. When determining this, I look at how it will affect my client's books overall before I determine if I will depreciate or expense a fixed asset that is less than $2,500. This is because your profit and loss statement will also be affected, and we have to know what is the best strategy for our clients when considering the client's bottom line. Okay, so let's lay down the foundation for our asset that we will insert in QuickBooks. So what type of fixed asset should we purchase? Let's purchase a hospital bed. We will purchase a Hill-Rom electrical medical bed with a mattress for 3,500 on February the 1st, 2025. So we have the fixed asset, the purchase price, and the date purchase. Now we need the useful life of the medical bed. The useful life is how long the asset is expected to last. For a medical bed, this will be 7 years. You can find a list of fixed assets, useful life in IRS publication 946. I will add the link to the publication in the description for your convenience. The publication does not have a specific category for medical beds, but because this classification aligns with the IRS's grouping of certain equipment types, for instance, office equipment, we will use the 7 year recovery period as documented in publication 946. Now we can start creating our depreciation schedule. If you have QuickBooks, you can follow along with us in your QuickBooks, or if you don't, you can use Excel. Here, I'm in the accountant version of QuickBooks. So it may look a little different from what you're used to for those who have a subscription. On the left panel of the QuickBooks Advanced subscription, you will see Advanced Accounting. Once you select Advanced Accounting, you'll see Fixed Assets. Select Fixed Assets and it will take you to this screen. Once on Fixed Assets, select Add an Asset. Once you select Add an Asset, you'll see that the right panel will pop up. The first thing we want to enter is the asset name. For the account name, we're going to enter in the medical bed that we purchased, which is the Hill-Rom electric medical bed. For the description here, we're going to enter in the serial number. If you purchase a vehicle, you'll enter in the VIN number here, or enter in some type of description that will help you identify the asset. In case you sell the asset or the asset is dissolved, you'll know which asset to select in your books. Here we'll do SN, and we're going to do X1234, X1234. Next is the purchase price. The purchase price was $3,500. Now let me add that the purchase price will include fees. For instance, any delivery fees or setup fees. It will also include taxes that are associated with the purchase. The purchase date, we said that we purchased this asset on February the 1st, 2025, and the depreciation date will also be February the 1st, 2025. In this example, the depreciation start date is the same as the purchase date, but if you were to put your asset in service on a later date than what you purchased it for, then the depreciation start date will be different. Next, we will go to the depreciation method. Once you do the drop down, you see that we have three different types of methods. These are your three most popular depreciation methods. First, we have the straight line depreciation method. The straight line depreciation is one of the most popular methods for depreciation, where the asset's cost is evenly spread out throughout the useful life of the asset. The double declining and the 150% accelerated depreciation methods are both accelerated depreciation methods. Double declining balance method is an accelerated depreciation method that depreciates assets at twice the rate of the straight line method. Similar to the double declining balance method is the 150% accelerated method. This method uses a lower rate of 150% for the straight line method. This method is less aggressive than the DDB, which is the double declining method, but still allows for accelerated depreciation. So for this example, we will select the straight line depreciation. The useful life, we mentioned that the useful life for this asset is 7 years. And then we have our salvage value. The salvage value is the value you believe the asset will be worth after its useful life. One of the most common cost report errors is that the salvage value was not removed in calculating the depreciation cost for buildings. For Medicaid cost reporting purposes, all buildings must have a minimum salvage value of 10%. If you feel like your asset will still have a value at the end of its useful life, the salvage value will remain on your balance sheet until the asset is dissolved or retired from service. For this example, we're going to use 10% salvage value, which is $350. Now let's start entering in the account details. So first we're entering the asset account. The asset account is furniture and fixtures. If it wasn't here, then we'll click add new, and this is where we will enter in our new asset account. The same for the accumulated depreciation. We're going to select furniture and fixtures here, but if we didn't have this here, we'll add a new account here. Now we will enter our depreciation account. This is your expense account that will appear on your profit and loss statement. Remember, depreciable assets are expensed over its useful life, so a portion of the asset's cost will be entered as an expense until the asset is fully depreciated. So here we will select depreciation expense. So it doesn't look like we already have that account here, so let's add it. Account name, depreciation expense. No account number. The account type will be expense. Well, actually, it's going to be other expenses because it's not an operational expense. It's another type of expense. So we're going to select other expense. And it's not amortized. We are actually depreciating this. So we'll select depreciation and we can click save. So now that we've done that, we can click save. Okay, so it's saying that we still have to do our accumulated depreciation amount. So let's just do the use auto-generated depreciation. So what that is doing, that is accumulated the months. So because we purchased it in February, but we are actually putting it in service, or we're actually just not putting it on our books in May, it is actually accumulating the depreciation from those prior months. Click save. And here you will see that we have our depreciation schedule. This is what I really wanted to show you here. So if you click the down arrow, you will see how much is depreciated each month. And then once you click out of that, you will see your fixed asset list, and it will show you your asset name, the purchase price, the purchase date, your asset account, the accumulated depreciation, and the remaining value. So these are the components that if you did create your depreciation schedule on an Excel spreadsheet, these are the components that you will need on your Excel spreadsheet. I hope this information was helpful. If you are interested in getting QuickBooks, you can use our discount code by clicking the link in my description. Remember that this feature is only available in the advanced subscription of QuickBooks. Right now, they have a Memorial Day special going on, so this will be the perfect time to sign up for QuickBooks and take a look around to see if it works for you and your business. If you are ready to get your business finances in order or have questions, feel free to contact me. I would love to work with you. I offer accounting services, and I also have a support community for those who want to be hands on and just need guidance. And as always, wishing you much success in your business.